Okay, everyone, this is your weekend update for stock market trading that ended the week of Friday, August 21st. I'm going to begin with the US dollar. The US dollar had some very strong bullish daily candles here towards the end of the week. I have the possibility that the US dollar did put in an important intermediate term low. It bumped right up against what I think is an active resistance rail. During trading on Friday, it did close above the 8-day moving average, which for active traders is one that is often watched. If we see that dollar break clearly that rail and above 94, there's probably reason to think that possibly this intermediate low has a higher probability, and we could see a much stronger US dollar in the intermediate term. Now, of course, there are also downside targets, which is my primary count, that we do have room yet to fall onto the downside before what I think would be a primary degree low at some point towards the end of 2020 or early 2021. So I'm going to be watching that closely, not trying to make any predictions as to how the dollar would correlate to moves in stocks and metals. Would probably say with a little more probability that it would influence the metals, which is where I'm going to go next. So if we take a look at here a daily chart of GDX, so one of the mining ETFs that I follow, we had an attempt on Friday to try to get through the 21-day EMA. The 13-day EMA is just above it, and it was rejected. Now, it was saved as support by the 34-day EMA. I'm watching this carefully. It's possible that Golden Miners has a lot more work to do on the downside. Getting to the shorter term, I tried to take a stab at a longer term play here. This would have been on Thursday. I was really quickly stopped out when it went back beneath what I was hoping was going to be a supporting rail. And then it looks like some consolidation that could potentially resolve itself upwards, but I don't know. So the primary count here in GDX is that it's going down strongly. If we look at GLD, this is on a weekly chart of GLD. What a beautiful cup with a handle that I think was enough for the handle in GLD. I do have potentially one more bullish leg ready, which is why on GDX I've got that alternate count up to the upside. But I do have the potential here for an intermediate term trend change to the downside. So on GLD in the short term, if we do see an immediate fall, then I think we've got the easy resolution that GLD is heading much lower. But if we do see a strong bounce, then I think this is the minor 5 leg. And I would probably be willing to try to trade this for a last move up into what I think here might be an intermediate term top. Okay, now as for stocks, I want to take you to financials. So financials and small caps have just been getting all kinds of negative publicity. Yes, they have been sold recently. I want to point out, though, of course, they haven't made a new uptrend high, this being XLF, since June, that from the early part of July, this is an uptrend. While not nearly as strong as Tech and SPX, even the Dow, which did break above its June highs, we did have a pretty nasty week here that just finished, where it's down almost 3.5%. But notice it held what I think is a really significant supporting lower rail, and also held on the weekly the 13-week EMA. If I take you into the daily chart on it, you're going to notice I'd have to have a much thicker line to get it to draw to support, but it's very close to that support. I'm willing to give XLF on the short term. If it can get above here, about 24.50, I think it has a lot of room to run. And I would, of course, give it the option of choosing to resolve itself downwards. If it breaks here the 50-day moving average, which is about at 24, it's probably going to drag the entire market with it. and it ends up getting down to an intermediate low, which would definitely be painful. IWM very similarly. Take a look at this active supporting rail since March. 1, 2, 3, 4, 5, 6, 7, and now what I think is the 8th supporting hold. If we can get a move up above this bull flagging resistance line, which is about at 156, I have some really exciting near-term targets in IWM. So I did not buy either XLF or IWM. I want to wait for confirmation. We're much closer to the lower rails than breaking above the upper rail. In fact, the lower support on IWM is actually a quadruple support. Gold, the June high, this rail here, that rail that you saw that goes all the way back to March, this rail here, the parallel rail that connected what I think is the Minuet 1 and 3 tops, and then finally this shorter term supporting rail. Lots and lots of support. I was not willing to be an active buyer because I know how much room it has to run if it resolves to the upside. So a move up above this rail followed by a back test that holds would get me long. And I definitely would be looking for, at that point, small caps to break the all-time high. Now, of course, it could choose to resolve itself to the downside. Like I said, if we see a break of that rail, if we see a break here, there's clustering of the 50 and 200. These are the week moving averages. On the daily, breaking that rail, and then here breaking the cluster of the 50 and 200, it's going to be painful. I don't know which way it's going to go. We just got to be ready for either direction. Let me take you now into SPX. So into the weekly, we see very, very strong weekly moves that broke above the all-time high, an all-time closing high. I would point out that the closing high is not done with any kind of weekly divergence. In fact, that weekly close is just getting into an overbought range in the low 70s on the RSI. I think there's room to run. So if I show you something similar on the Qs, now Qs again, more overbought on that weekly RSI, but really 1, 2, 3 weeks, I still think more room to run. And let me go ahead and get into some of those daily charts here now on SPX and QQQ. So we had a close on the daily above this kind of sideways consolidation area during the week of the 17th through the 20th. I see that as bullish. You're going to see upside targets that I think can be reached towards the end of August and into September. I know this seems very bullish, but it pays right now to be on the correct side of that trend. Now, of course, could we see an intermediate top either right now or soon? Yes, we could. If financials and small caps want to resolve lower, this could be a painful trade to the downside. Yes, it's possible that we saw that intermediate term top in tech. But as of now, I have a close above an active supporting rail on tech that goes all the way back to May. I think it pays to be on the side of this active trend, and we're told not to. So when would I know not to? Well, I would know not to when the 8-day EMA gets broken. And that would occur this week of August, coinciding with something right around 276 to 277. I don't think you can get bearish until that breaks on the Q. So with that said, take a look at some of the daily on the big tech. Apple, a massive daily move on Friday. Does it look extended? Yes, it's extended above the 8-day. But you know what? Why not be a buyer in one of the strongest stocks in one of the strongest sectors? And I am still holding some Apple going into this week with what I see here is a target right around 520. And when I get into the shorter term time frame here, let me take you to the shorter term time frame on Apple. I've even got upside targets that could take it all the way up into the 530s. So let me get you now onto the daily into Tesla. So Tesla, I have been actively long in one way or another since what I think is this intermediate term low at 1365. And I want to point out this top rail right here on Tesla. That is a rail that connects all the way back to the February high through this high in early July at 1795, and Tesla just broke it and held above it on Friday. Could it have just been overthrow with the reversal to come? Possible, but typically when you see these kinds of top rail breaks and holds, it is bullish. So Tesla on the short term, you're going to see this rail right here is where that rail that goes all the way back to February, it tested it at the end of the day Friday and it held on a closing basis. I do have resolution to the upside. Now, I'm not strongly showing resolution to the upside. I'm going to be very wary just because of how extended this run has been, that we could get an early pop and we could get a drop. But Tesla has told me for about the last 7 trading days, I have been wrong to exit too early. So we're going to see what happens with Tesla. It's certainly exciting, certainly very liquid, volatile, and lots of attention paid to it. If I take you into some other positions, I want to show you Amazon. So I think Amazon, after its breakout right at the beginning of this week, has been consolidating for the rest. And I do see that as a bullish consolidation. I have very bullish upside targets. If Amazon can break this daily rail, so it just needs to break the weekly high at about 1320, I see a big run up on Amazon to the upside. Let me take you now to its short-term target. Here is that bullish consolidation, a break first at about 3,300, then breaking this last week's active high at 3320. You can see I have very, very bullish upside targets on Amazon. On Google, other position that I am currently holding, Google with a really nice cup and handle breakout. It's been riding this active trend upward, strongly above its 8-day EMA that actually was tested this week. And so short-term targets here on Google, I have it strongly into the 1600s, possibly even challenging 1700 by the end of August. Also, want you to see Facebook, another position I currently hold. So Facebook, another consolidation that just happened at the end of this week that finished what I thought was a really nice minute degree 4 triangle, a breakout, a trend line hold that would take us all the way back to a low towards the end of July. And you can see I have strong bullish targets that hopefully would resolve themselves to the upside. So let me show you that triangle here on Facebook. Really nice sideways consolidation. Maybe you could call it an inverse head and shoulder, and we broke this neckline. It got tested. I think it held. And so I have what I think is a bullish target above 280 with an ultimate resolution by the end of August at 295. So if the charts and my speech says that I'm still bullish, the answer is yes, I am still bullish. I still see resolution to the upside. Of course, I'll be on my toes. I already talked about what would get me out would be a breaking on daily charts of 8 and 21 day averages in SPX and QQQ. And that 8-day was consistently tested over this past week in XPX. I think we got the resolution up, but I'm going to be on my toes. Any move down at the early part of the week, especially a close beneath the 8-day, is going to cause me to drastically reduce my positions. If we close below the 21-day EMA, I will exit and then probably start looking to short in a tactical way. But I think it pays right now to still be friendly with the trend, which has been strongly, strongly up, especially since the early part of June. So exciting as always. Yes, I do have active long and leverage positions going into this week. We're going to see if that ends up paying off, or do I need to exit quickly? As always, certainly hope that you enjoy the videos. Feel free to give some comments on the YouTube channel or look me up on Twitter. I am definitely active and posting. And good luck to you.